Good afternoon, everyone. This is Henry Gamble with SimplerOptions.com, and in today's free video I'd like to follow up on an idea that John had shared in one of the previous videos looking here at GMCR. So this ticker is kind of unique in the fact that it is not the most bullish trend on the planet. Obviously GMCR has taken a little bit of a hit here, but the whole reason we're even interested in playing this is because of the daily squeeze. So the first thing that we know is the squeeze is the signal that the reason why we're looking to take the trade. If we come in and kind of drill down to this, the other signal that he was looking at was a bit of an inverse head and shoulders that stemmed off of this level here. So if we draw these in and extend our trend line out into the right, we can see where this neckline comes into play, and essentially the area we're looking for it to break in order to move on into its next extensions. So some of the things that I like to look at inside this, anytime you have a daily squeeze, drop down into your smaller time frames first and see what they're starting to show you. The ones that I was using for today's analysis started with the 5-minute. So when we started the day, we put on a couple of trades, and I'll show you those. Then it pulled back and we came down into the 5-minute where we had been focused on this. Now the thing about this is the price action was weak, but you'll notice the momentum was moving from lower to higher, and you were still on the buy side of the 8 and 34 moving averages. You'll also notice when you draw that neckline off the daily charts, it still comes down and shows up on your intraday time frames, which is a very easy way to run the analysis on Thinkorswim. So the 5-minute squeeze fires long. Then I like to come down and just kind of start essentially building up the squeezes and see what the best one is that can tie into the daily. Here we have a 15-minute that should lead into that. And then if we come over to the hourly, this is another great signal that is forming. So I essentially take the break of the neckline, the 5-minute that's fired long, the 15 that's coiled looking to do the same, and the 60 that's on the buy side of those moving averages as being excellent signals to take us up into our new highs. And not necessarily new highs, but essentially just extensions for the move. So those are all the signals I like to look for. Then we can run the swings of the previous major high to low. And these start giving us areas, and I don't have them shown on this chart particularly, but areas where you start to coincide with the voodoo line that's around 145. So the extension off that move is at 143. That's where you could take aggressive profits on this. The 1618 comes in at slightly higher prices, and then the voodoo line is at 145. So that's all the technicals that help you set up this trade. Now what are the various ways that you could play it? Well, there's quite a few. And the first that I would like to take a look at is the butterfly. So what we've constructed here is the purchase of the 140 call, the sale of the 145, and then the purchase of the 147. This essentially breaks a wing, so if the underlying does explode higher, well then we still have essentially no risks to the upside, paying $1.30 for it. If we can pin at that 145 extension on Friday, well then that's where our butterfly will really come into the best play. And I like these types of plays because you pay $1.30 for it, having the 140 as your long strike. That sets up your break-even price at 141.30. So that means from here the underlying would only have to rally 40 cents to break even, and then obviously anything to the upside is just that much more beneficial. The aggressive way to play it would be with the directional calls, and essentially this is just a good comparison, because what you'll see John do a lot of times is that he does take the directional calls because he wants that good directional exposure. But by staggering this trade, not only will the butterfly have a bit more favorable Greeks as far as time decay and everything else goes, but it's just a bit more easy to hold on to into that Friday, because number one, it costs less of a debit. It's less than half the cost of what the directional call would be, and just a little bit more lenient way, because anytime you sell those calls from the 145 strike, that is helping you take in that premium, which finances the directional calls. So at any rate, that's two ways to look at play GMCR. That's a follow-up on the technical analysis that John had given you, and two ways to look at playing the trade. So I hope that helps, and we'll see you guys at the next free video.